There's so much going on right now. There's the economy, gold prices, inflation. We got a whole bunch of headlines to talk about, a whole bunch of really important things that are going to affect you directly. So what I think would be best in this video, rather than having a setup and try and catch the viewer in the beginning, I'm just going to go through this big word jumble on my script here. I'm just going to go through one at a time. We'll go really quickly. A lot to learn in a short window of time. Let's do it. And I also want to talk about retail sales, some numbers that just came out. Do you remember a few weeks ago we were talking about the S&P potential double top? It wasn't a double top, as you can see here in this chart. It broke through. If it had bounced lower from there, and it almost did, then that would have been a long way down for the S&P 500 and likely all other stocks as well. They trade like flocks of birds. When the NASDAQ's doing well, the Dow's doing well, the Russell's doing well, they generally will show positivity on the same days and negativity on the same days, give or take. Obviously, it's not a perfect science. When gold fell pretty strongly below $2,000 an ounce, a lot of people, and we actually did get a lot of the same question coming in, people get freaked out or spooked by that. And I always tell you, and I've always told you, and I will always tell you the exact same thing. You never, ever, ever have to worry about gold. It could drop $300 an ounce today. It doesn't matter. It will be fine. The trajectory is all about where is it going. The rise in the price of gold is actually showing you the decline in the purchasing power of the U.S. dollar. So as they're creating more and more money, watering down the value of all dollars, over time they will always be driving gold prices higher. And when you think, wow, gold's dropping pretty significantly, that's always in a short window of time. Look at the 1 month chart. It's down about $40 an ounce in 1 month. So right now, recency bias is going to be having an effect. Everyone thinks, wow, gold's not doing well. But look at it on a 3 month chart. Oh, it's up. Look at it on a 6 month chart. Oh, it's up. 5 year chart, higher. All-time chart, much higher. It will continue on this trend. And this whole time that we're talking about, that whole duration, from when it was decades and decades ago until now, that whole time, people at various times when gold would dip, they would worry about gold. They'd worry about gold mining stocks. They'd worry about things. You don't need to worry. Gold will come back. If it drops $200 an ounce, then you know that. Get your popcorn, sit on the couch. You can watch it go up $200 an ounce next on its way to much higher prices. And what happened was that the inflation data came in stronger than expected by everyone except for you. And investors then worried that the Federal Reserve would not be as likely to lower interest rates. The higher interest rates are not good for gold because if you can get a few percent on your money in the bank because interest rates are higher. And then on this side, gold here has no yield. It just sits there like a rock. Then comparatively, you're going to see more money fleeing the gold space. But investors are backwards on this one. They've got it completely wrong. And as you know, inflation is coming back and everyone's surprised by it. I was talking about this months and months and months and months ago. It's going to be an inflationary bounce, and now inflation will go much higher. But don't worry about interest rates. The Federal Reserve is going to absolutely cut interest rates pretty aggressively too, as soon as we roll into what is going to come, whether recession or depression. All across the Eurozone, they're reducing their growth expectations. I told you that a lot of these nations are on the brink of recession or they're in recession. We're going to talk about that in this video, some of the headlines as we go through them. Meanwhile, Japan fell to the 4th largest economy in the world from 3rd, and they gave it a spot to Germany. But Japan had a surprise decline in their GDP. And who's the 4th largest economy in the world? Wrong. It's India. And that's only for now. They will be the 3rd largest economy in the world soon enough. They'll displace everyone except for China and America. They're growing dramatically quickly. We talk about that in this video too. And this entire video was inspired by some emails that a lot of you are asking because we came up with a stock pick January 8th. It's gone up tremendously in price. People are asking about what should they do. In fact, while we're talking about it, I'm going to give you the entire report that we wrote about Pixelworks beneath this video so you can see what kind of analysis we're coming out with and why we have one of the most popular financial newsletters on the earth. And I tell you what I always do is I sell a portion of it. You do what you want. I don't know what's best for you. This is not trading advice. I always sell a portion of it and I let the rest of it ride. and I might buy more if it's starting to do what I thought I was going to do, and if I think there's more upside. But that's just an example. I always tell you guys, I put out videos. I have a lot of videos telling you about the ways to know if it's time to sell the stock that you own. I'll put a link to one of those videos at the end of this video. This is an article from Investopedia. U.S. economy news today. Are consumers hitting a wall with their spending? Spoiler alert, they absolutely are. If you look around, drive by the fancy steakhouse, see how many cars are in the parking lot. It's not rocket science. You just look around you in the world. Everybody is concerned financially now. It feels like it. Companies are pushing up grocery prices and consumers may be pushing back, White House economists say. This is from Yahoo Finance. No soft landing. The U.S. economy is going to fall into recession in the middle of 2024, Citi's chief economist says. Here's what you got to do. There's everyone has an opinion. They can put in front of you on Yahoo Finance that there's going to be a recession, people thinking that, but then there's also a bunch of people who don't think that they're not talking to. You need to be the one, just like with medical stuff. This doctor says A, that doctor says B. You need to be the common denominator. You need to be the one in the middle of it that's making all the decisions. So you decide if you think a recession's coming. Don't worry about if you see something on the news, because there's also a whole bunch of people thinking the exact opposite, for good reason, that are not in front of you on the camera right then. Media is about what they're focusing on. They decide ahead of time what kinds of guests they're going to have on. So they're telling you that this is what everyone's believing is going to happen. And you see that, and you say, oh, okay, so there's going to be a recession. Maybe. How right is this guy? What is he basing his analysis on? But either way, however you look at it, there's a recession or depression coming. Decide for yourself if you believe that or if you agree with it. And then take action so you land on your feet for the best possible outcome. And if you remember a month ago, the World Bank said that the entire globe is in for the weakest year since the pandemic. Nothing's changed except that the economy has actually gotten weaker than when they said that a month ago. This is from Axios. Recession reality hits major economies. Wow, so they've caught up to you. United Kingdom's in recession right now. Japan's in recession. There's plenty of others all around the globe. And next will be the United States. In Europe, officials now expect the Eurozone economy will grow just 0.8% this year, down slightly from the 1.2% expected in the fall. That's a decline of 50% in the expectations since the fall. And they're still not pessimistic enough, in my opinion. January wholesale prices rise more than expected, another sign of persistent inflation. This is from CNBC. The Producer Price Index, a measure of prices received by producers of domestic goods and services, rose 0.3% for the month, the biggest move since August. What happens is that those higher prices for the producers have to translate into the sticker price that they're going to put on the products they sell. So those prices go up because the input prices went up. Excluding food and energy, core PPI increased 0.5%, also against expectations, for a 0.1% gain. It went up 5 times that much. The U.K. economy slipped into technical recession at the end of 2023. Yeah, okay, that's a technical recession. Just wait to see the real recession, which is what they have now. India is set to clock up to 8% GDP growth as it boosts manufacturing capacity, the minister says. It's a matter of time. India just overtook China for population. Not that this is at all, well, sort of related, but they're going to overtake every other country except for China and America in terms of their economy because their GDP growth is so tremendously high and they have so much room for growth and for that high growth rate to maintain for decades to come. If you agree with anything that we're saying here today in this video, or if you think that we deserve more views, which we do, please click like. It would really help us out. Also, if you want to hear what we have to say next so we can keep giving you free information that is educated, actionable, and based on thorough analysis and experience, then you simply just have to subscribe to this channel.